21K already here. Seems like the next pin code is going to be a fresh all-time high.
Yeah, it's. I'm not surprised, but it's very heartening to see that the trend, what we saw in a sense for the market, actually has turned out to be a reality. What really has helped the market? Global cues, largely, decline in dollar index, crack in oil, and the fact that globally the mood point, I think, is risk on. So are we in for the best expiry of 2023? Remember, 2023 has not been a very good or a grand year for the market per se. The answer to that, well, maybe yes. What's heartening in my book is to see three things. One, FIs have been net buyers for 5 days on the trot now. And at higher level, there is strong follow buying, which is what you want to see. And I'm talking about large cap stocks. So at higher levels, earlier, the market in a sense saw profit booking. But right now, once you've crossed those key technical levels, FIs are back, and higher levels, there is FI buying. So are we on course to scale higher? The answer to that may well be yes. Could we make a new high on the Nifty before the year ends? That possibility cannot be ruled out. What looked like a very tough trek now looks like it is just a kissing distance away.
Yeah, and the last time Nifty was at 20K levels, which is in September, and the market construct where crude was, where dollar index was, things were a lot different. So seems like, all things are pointing towards a stronger base case for us to make a dash to that 21K mark.
So you got 1 quarter of earnings.
Yeah.
That automatically will make market look cheaper. Then you had this mid-air turbulence, if I may use the word, because of global geopolitical concerns. That has got digested, and you've seen a decisive move in global risk appetite back to the market in terms of where the emerging market appetite is. So the lay of the land is that while small and mid-cap stocks, they will do their bit, the real rara action is in the IPO market. But I guess now, वो कहते हैं ना, समय आ गया है. I think now for large cap stocks and banks, I think they could be the dominant theme for next couple of days.
Oh, yes, indeed. And take a look as to how we've performed for this series alone. 6.5% on the Nifty, with the Nifty Bank up 5.4%. But yes, Nikunj, as you said, rara, and it's going to be nothing short of that when it comes to the primary markets, because today is a critical day. You've got the listing for Tata Tech that is expected. And guess what? We're expecting even a 4-digit listing of 1,000 rupees a piece for Tata Tech, and a bumper listing, nothing short of that, for Iradia as well. So clearly it is going to be a pretty healthy day for both these bumper listings.
No, Iradia got listed yesterday. We'll talk about it. But Tata Tech is where, let's start with it, because line
55% premium, apologies, yeah.
87%, I don't know why
87, yeah.
No, by the time it closed, it listed at a 55%
yeah.
premium and then went on to.
Yeah. We'll talk about it,
Yeah.
it's all right. Okay, Tata Tech. Now, look at the grey market premium. So what the offer price was, that really becomes irrelevant. Now let's look at two scenarios. If you look at the grey market premium, you are looking at a listing anywhere between, closer to about 900 rupees. At 950 rupees, it will be trading at a P multiple of 53 times. If it's a 100% listing, considering that there is an underlying, vibe and a strong current, and being a Tata Group company, and after yesterday's IRDA experience, everybody would like to, rush for it. So let's say it makes a debut at 100% premium. If it makes a premium at debut at 100% premium, the market cap would be 40,000 crore, and the P multiple would be about 55 times. At 55 times, what are the comparables? Well, at 55 times, you compare IRDA with other tech companies, and you would say that it's reasonably priced. So at Tata Tech, after 100% premium, you compare that with KPIT and other peers. Not too many peers are there, but you would say that Tata Tech actually would be fairly priced. So rather than chasing the stock on the listing, and if the listing is more than 100% premium, it may not be a great idea. If you own the stock, you got lucky in the allocation, please don't sell. But the margin of safety in the near term, if you're buying a stock, an IT company, even though it's a Tata company, after a 100% pop-up may not be the best of the idea. You want to be a buyer in Tata Tech, but when there is a decline or when there is a profit booking in the market, the stock will occupy all the limelight. It will be like the talk of the town. Everybody is excited. Everybody wants to know more. There is this fly in the ointment, so to speak, about them running into some rough weather with a client that may just take the niche away. But my limited point is, you have to be very clear in what you're chasing. To chase momentum in Tata Tech after 100% listing, after 100% gain, may not be a great idea. To sell the stock even after 100% listing is also not a good idea. So then what do? Just wait if you don't have the shares.
Just sit it out, and like you said, as opposed to the peers on an FY24 PE basis, it's a lot cheaper. In fact, the cheapest of its listed peers entity, look at L&T Technologies, that's trailing at about 36 times, KPIT Tech 67, and Tata Elxsi 63 times. So it's the cheapest of the lot in that sense.
This is offer price, right? I mean, the listing is not
on
going
the
to
offer
be there.
price, yes.
Now, you assume it's going to be 100% premium, which is what it indicates. Then the word cheap is not there. I mean, then it just changes. So, do you really want to chase the stock? See, you want to chase the stock if you get it at the offer price.
Yeah.
You will not get at the offer price. You'll get 100% premium. Then what do you do is the question.
Yeah. And we will be sure to ask that very question to all of our experts as well who are joining in today. And of course, we'll be live at the stock exchanges as well, covering the opening ceremony. Remember, it's the first from the Tata stable in about 18 years. So in the last 2 decades, you haven't had any offering from the Tata Group, and this is surely something that we're going to be catching out for. But not what's next for the market, like we've been talking about, the dollar has seen a bit of a recovery overnight. You've got 5 state election exit polls as well to look out for. Today, you've got the Q2 GDP data as well. And then, of course, come tomorrow, you'll have the November auto dispatch figures as well. So in that sense, a lot of these very near-term triggers that the market has to work with.
See, today is the outcome for exit polls. And if markets like what the exit polls have to indicate, I think we'll make a new high tomorrow. If markets don't like what the outcome of the exit polls is, you could be pushed back. And then a new high will have to wait it out for some more time. So I don't think from a market standpoint, this is something which is going to be a swing event. But because of the positioning of the market is such right now, really in terms of connecting the dots, a push towards a new high based on the exit poll outcome, I think is something which cannot be ruled out. If markets don't like the outcome of the exit polls, will we see a complete crackdown and will we go back to levels of 19,500, 19,600? I doubt it very much because the markets are not going up in anticipation of any state election poll. The bulls just need that last trigger for markets to go higher, which may come because of election polls, but that's not the only trigger where markets have gone higher. So if markets have only gone higher in anticipation of strong outcome for the current administration or for the Modi government, then we would have said the outcome of election polls would have mattered, but this is not central. Yeah. So I don't think from a market standpoint it really matters. If at all, if the outcome is strong, it may push the market to a new high. The damage I think will not be more than 2-3%, 200-300 points.
Yeah, absolutely. And